Okay, so welcome to the class, and today we'll talk about is taxation. Yesterday we had spoken about was the government budget. So today we will talk about is taxation in India. Yes, so let us start the class and make sure that you remember that because everything is related. So government budget was a new chapter, and then I have collaborated and combined it with also taxation in India. So we will study that what type of taxations are liable, and they are used in India. Okay, so let us study. So here in this section we will study is the taxation in India. Okay, we will also study is the classification. Yes, and we will also study is the types. Okay, so now taxation in India is like the Indian constitution is a quasi federal in nature, and the country has a three-tier government structure. So to avoid any disputes between the center and the state, the constitution has created certain provisions regarding the taxation. Okay, so let us see first. As you remember, it's a three-tier government. Okay, so that is why to avoid this, the following provisions. So what are the provisions? Let us study the provisions first. Okay, let me just change the pen. Okay, so the first one is division of powers to levy taxes between the center and state is clearly defined. Okay, so that is very, very important. Okay, now there are certain taxes which are levied by the center. So certain taxes levied by the center. Okay, so but their proceeds, like the collection is divided and also distributed between both center and state. So what are the examples I will give you is union, excise, duty. Okay, now there are certain taxes which are levied by the center, I told you, and but their proceeds are transferred to the states, like as I said, estate duty on the property other than agriculture income. So there are certain taxes which are levied by, as I said, by central government, and they have the responsibility to collect them, is vested within the state. So that means it is the basically the centrally tax, but you have to collect it by way of various states. So example here I can talk about is stamp duty, other than included in the union list. Now there are certain taxes which are again levied by the states, and the proceeds are also kept by states. So states will take care of the taxes and they will only keep the proceeds. Example I can give you is VAT. So what is VAT? VAT is value added tax. So now first let us understand what is tax. So let me just rub this. Yes. So what is tax? So taxes are generally an involuntary fee levied on individuals and corporations by the government in order to finance government activities. Okay, now taxes are essential. Okay, you cannot, every country has taxes. Okay, and it means a favor, or it can be an advantage granted in return for something. Okay, so now we will talk about, there are two types of taxes, which is, one is the direct tax, and in the another one is the indirect tax. Okay, so now let us see the classification. Okay, so first we will talk about is the direct tax. So the direct tax is levied or is taken by the government directly on the individuals or corporations. So they are called as, that is why it is direct. Okay, so that is why it's called as direct taxes. Okay, now some more points about the direct taxes. The incidence, like who will bear the tax, that is the meaning of incidence. The incidence and impact of the direct tax fall on the same person. So I'll give you example like income tax, then corporation tax, and then wealth tax. Okay, so they are very progressive in nature. So they are progressive in nature, and they have, it serves both social and economic objective is there for the government. Objective of, that is the distribution of income, is taken by way of taxes. So the government taxes them by way of, it is a social objective of the direct taxes, the distribution of income. So a person earning more should contribute more in the provision of public service. Okay, and this provision is also known as progressive taxation. So yes, so if you earn more, you pay more, and this provision of paying more is known as progressive taxation. All right, and it is not at all inflationary. So it doesn't depend on rise of price or whether the prices are rising or decreasing. You have to pay your taxes. Okay, so now let us talk about is indirect tax. Yes, so we will talk about is indirect tax. Okay, so this is also levied by the government on one entity, like on one thing. Okay, so say for example, it is basically levied for manufacture of goods, but it is indirectly passed, because see, the manufacturer, if he is taxed, obviously he wants to remove the tax from us. So it is indirectly passed to the consumer, because he will not compromise on his profit. So it is passed on to the final consumer. Like medicines, medicines is an indirect tax by the manufacturer. So the manufacturer tells the consumer that you are buying the medicine, so you have to pay the taxes. Okay, now the incidence and impact of the tax are not fallen on the same person but on different person, because manufacturer is paying, but manufacturer is rather not paying. In fact, the consumers are paying. Okay, so that is why the incidence and the impact of the tax fall on different persons. Okay, so what are the examples? VAT, then service tax, GST, excise duty, entertainment tax, and also customs duty. So they are very regressive in nature, because it's like You have to pay, come what may, whether you buy or not. That is why it is regressive, very, very aggressive. Only economical when an indirect tax is levied on a product, both rich and poor both have to pay. So a person earning 10 lakhs a month also pays the tax on wheat purchases, as the person earning at 3,000 rupees also, he will also pay tax on wheat. So there is nothing like high and low here, okay? And that is why this is called as regressive taxation. So you're forced to pay whether you're earning low or whether you're earning high. And yes, this is inflationary. So this is depending on inflation. If the prices are high, then definitely you have to pay more tax. So direct tax is nothing to do with inflation, and this progressive taxation, the rich people will pay more, the poor people will pay low or less. But in indirect taxes, it is regressive taxation. Whether you're rich or whether you're poor, you have to pay. And it is inflationary in nature because it all depends on the rises of prices. Okay. So now, as I told you also, if you talk about, like, we will talk about some more taxes. So let's come to the next section. So yes, it is called as ad valorem and, okay, versus the specific tax. So there are two types of tax. So first we will talk about is ad valorem. So ad valorem tax. Now this is based on the assessed, okay, value of the product. So how much is the value of the product? Based on that, the tax is put. Okay. So in fact, what is ad valorem? So ad valorem is a Latin word. So all are basically taken from Greek. Okay. Meaning, what does it mean? Now you'll understand the meaning of the tax also. According to value. Yes, very important. Okay. So most ad valorem taxes are levied based on the value of the item you purchased. Okay. So example, GST in India has 5 tax rate slabs, like 0.5. Then, so GST has 5 tax slabs. So based on the value of the purchase, you will pay. So it starts from 0 to, to 0.5 to 12 or 5, then 12, then 18, and then 28%. So yes, let me give you an example. You'll understand this better. So GST in India, this is for your information, has 5 tax rate slabs. Okay, so one is 0, 5, 12, 18 and 28%. So example of ad valorem is also property and sales tax. And yes, they are progressive in nature, because progressive in nature, depending on the purchase material, you will pay. Okay, so if the purchase material is less, you will pay less. Yes, talking about specific tax. Okay, so let me just clear this also. Yes, now we will talk about is specific tax. Okay, so it is a fixed amount taxed based on the quantity of unit sold. Okay, so specific tax is levied based on the volume of the item purchased. Okay, now the tax is usually expressed in specific sums. So example I'll give you is like excise duty on petrol. So it's a specific tax. It is specified, it is told you that it is going to only be, the tax is only on petrol. Okay. Example also on excise duty on liquor products. Okay. And yes, they are regressive in nature. Why regressive? Whether you are rich or poor, you have to pay. Okay, because it's a duty, it's a tax which is done on a particular product. Whether you're rich, if you want petrol, you have to pay. It's not that, you know, it depends on quantity or it depends on it. This is a tax which is general and it is regressive, it is forceful, you have to pay. And that is why specific tax is also regressive in nature. Now we will broadly talk about more taxes in India and we'll have a clear picture. So these are the taxes which I spoke about. Now we will talk the taxes which are in India. So yes, taxes in India. Now in India, taxes are levied on income and wealth. So they are levied on income and wealth. Now the most, you know, important, if we talk about the most important direct tax, okay, from the point of view of revenue, is personal income tax and corporation tax. Okay, so income tax, so let's talk about first income tax. So income tax is levied on the income of the individuals. It is also levied on Hindu undivided family. Okay, it is also levied on the unregistered firms and other association of people. So let me just keep continuing it. Now let me give you some more explanation of income tax. Now in India, the nature of income tax, okay, is progressive. Okay, so depends on how rich you are or how poor you are. Okay, so for taxation purpose, income from all sources is added. Okay, so let me, so income from all sources are added. Okay, and taxed as per the income tax slabs. So there is a slab, okay, of the individual. Okay, so let us see the slab. Let me just clear this. Okay, so I'll write here income slab. Okay, this is less than 60 years. So because after 60 years you do not need to pay taxes. So I'm going to see the tax rate also here, tax rate. Alright, so I'm not drawing the right line here, but anyways it's looking like a snake, but that is not important. The crucial thing is that how much is the tax slab. So if you're earning per year up to 2,50,000, there is no tax you need to pay. If your earning is up to 2,50,000 to 5 lakh, you need to pay is 5%, and up to 5 lakh to 10 lakh, then you need to pay is 20%, and excess of 10 lakh So you need to pay is 30% per year. Okay. Now one more thing you have to also remember in your exam is the surcharge, the extra charge of 10% of income tax will also be added where the total income exceeds rupees 50 lakh up to rupees 1 crore, and also the surcharge of 15% of income tax will also be charged where the total income exceeds rupees 1 crore. So I hope you have understood now the income tax. Now let's talk about the next thing, that is corporation tax. Yes, let me clear this.